Hello everybody, welcome back to another video. So today we're going to be talking about continuation break of structure versus reversal break of structure, right? So we just did a video on structure in the previous one. I didn't basically do a video on break of structure entirely, but I'll very quickly run down what break of structure is. I mean, it's in the name, it's pretty self-explanatory, but when you're in a downtrend, let's say, each low that is being broken is a break of structure, right? And again, in an uptrend, each high that is broken is a break of structure, right? And in a reversal scenario, so we're in an uptrend, right? This being broken is a break of structure, and this being broken is also a break of structure, and these being broken here are also breaks of structure, right? And if you're new to this, I know it might sound a bit overwhelming, but it's honestly not. Don't try and overcomplicate it. It's relatively simple, and I think this explanation of what CBOS and an RBOS are will clear things up, right? So CBOS is a continuation break of structure versus a reversal break of structure, right? In very simple terms, I will go through the definitions in a few seconds, but a continuation break of structure is something like this. So it's a break of structure that is basically signifying continuation, and a reversal break of structure is usually signified by something like this, right? You get the CBOS and then the RBOS here, right? This can sometimes be the reversal break of structure, but I'll go through this in a minute, but this confirms it, right? But I'll go through it now and we can understand it a bit more. Right, so a continuation break of structure, right? This is the definition. A CBOS is a variant of a break of structure, or a BOS, which refers to trend continuation. For example, in a downtrend, a CBOS is typically shown when a lower low is formed. So we're in the downtrend here, right? And a new lower low is formed in comparison to this one, right? So this low being broken and a new low being formed, that's the CBOS there, right? And again, here as well. And in an uptrend, it's basically shown when a higher high is formed, right? So we break this high, therefore making a higher high, and then we break this high, which is making a new higher high over here, right? And each one of these breaks are a continuation break of structure, right? Very, very simple. Other forms of BOS can also look like this. So we've basically got a big trend here, and then prices moved down, moved up, and we basically have a internal downtrend here in the external uptrend, right? So in an uptrend, it isn't, basically there's no higher highs being formed in this case. Obviously there is on the grand scheme of things if I'm going from here, here, here and here, right? Because this is also a CBOS, but they can also look like this, right? A small term internal downtrend in the bigger term external uptrend, right? So I said here, notice how this doesn't signify a reversal downward. It's simply a continuation down for a small period of time within the external uptrend over here, right? And we'll go through the internal and external in the next video, right? And it can actually also be classified as, you can also see CBOS like this, right? So we're in an uptrend and we actually break this low here, and then we continue higher, right? So we failed to convert lower. We've actually just taken this low and then gone higher here. And this is also depicted as a LGC, a liquidity grab continuation, right? Which is a model which we will go through in another section, right? So you've got CBOS variant 1 here. You've got another variant over here as well. And it's, again, I know it might be a bit complex at first, but honestly, don't worry about it. It's very simple once you kind of understand it. Okay, and again here, as I was speaking about before, another variant of a CBOS is here. We've got the external up trend over here, and then we've basically just came below that low, broken that structure point, but the external trend is still intact, and we are continuing higher, right? So they're all forms of a CBOS. Right, now a reversal BOS is usually it's another variation of a BOS. However, this time it indicates a reversal in the external trend, right? So we've got our external trend here, and we've got our internal trend, which will be here, right? So this internal is downward, and then the external is upward, right? And in this case, of course, the internal is going to be bullish, and the internal here is going to be bullish as well, right? Very simply put. Now, as you can see here, the difference is with a reversal BOS, right? You do get the CBOS over here, but as I mentioned in this one, right, this failed to convert lower after this break, right? It just continued going higher straight away. There was no conversion lower, therefore it failed to convert lower, so it went higher. Now, in this scenario, we've had the CBOS, right? But we've then broken this low here, which is the external low in comparison to here. So that's a reversal BOS. And sometimes as well, this breaking can be a sign of reversal, right? After we've had this variant of CBOS. So if I go back here, right? As I mentioned before, this failed to convert lower, continued going higher. But let's assume that this hasn't happened, right? And price is trading here. And then price has come down and we've broken this low. A lot of the time, that does actually count as a reversal BOS, right? It's more of a higher risk hypothesis, if you like, right? Assuming that that's going to be the reversal. But a lot of the time it can be a signifier of a reversal. This would be the best option as a reversal, right? If this breaks, then it shows that the external structure points have been broken, therefore we could see a reversal, right? So hopefully that isn't too confusing. You might need to watch that back a few times, but it will make sense once you kind of start getting the hang of it. So obviously here it says failed to convert higher, therefore showing unwillingness to go higher, and we break this low, which can also mean a reversal, but this is the true reversal BOS over here, right? The external low being broken in the uptrend, right? It's like this being broken, okay? Or this one. Now here are some graphical examples, right? So over here, CBOS, very simply, let's just say we have low, high, right? And we have internal lows, i.e. here and here, right? And this is broken, but this doesn't mean it's going to fully reverse, right? And we've formed another low here, and that's broken, and we've mitigated this inefficiency, and then we've ran to TP, right? So this is a trade I took back in February. But it's just an example, right? And this example looks like this, right? So obviously this looks like it's on a bigger scale, but it's when these internal lows here are being broken. Does not mean it's going to reverse, because there's not been any big external break over here, right? It's that example, right? We're breaking these little lows coming here, and then we're continuing higher. So this is what it looks like on a kind of graphical depiction. It looks like this, and then goes higher, right? And most markets do this, by the way. You don't usually see like just price going higher like that. Otherwise that would be unsustainable, right? You need a impulse and you need a correction to have a sustainable trending market. And that's totally fine. And all these little breaks here are CBOSs, right? They're not reversals. Here as well, we have a CBOS example and then an RBOS example. So this looks just like the reversal BOS example, which I showed here, right? So if I go here, we can see we had price trending up, right? Took that high, and then we had a CBOS. Now usually this could mean price is going to just break this low and then continue going higher, but price did do that, went higher, but we failed to convert higher after this low here broke, right? So this would then signify as our reversal BOS, right? RBOS over here. If this broke, that would be even better, but in this case it didn't. We've had this, and we've had strong momentum as well, and we've basically had impulse, correction, impulse. And again, if you're a beginner, basically what this means has been less effort to push price lower, which shows the bearishness is in control and the bulls are struggling to go higher, therefore we could go lower, right? So we have the CBOS and then the RBOS when this low is broken over here. And then in this instance, I was waiting for price to go higher, but it didn't actually hit my point of interest, but it just shows that price fell straight after, right? Over here. And this was a trade that I was, again, in February, that I missed because it didn't hit my point of interest, right? Which happens. But hopefully that is a clear kind of depiction and understanding of CBOS and RBOS. It's, again, it's a simple approach, but it's just, it might be a bit tricky to understand in the first few months of learning this style, right? But don't stress about it too much. Just try and understand it as best you can, and then go forward from there, right? In the next one, we'll be going through internal and external structure. So I'll see you all in that one.